Yeah, hello everyone. I am Vishal Periwal, Cement and Construction Sector Analyst with IDBI Capital Market and also heading institutional research. Our view on the budget is, union budget is positive, with the stance of the government is visible with the higher capital spend versus the revenue spend. Now, government expenditure in total is expected to increase by around 5% in FY23 BE, with the higher outlay is on the capital expenditure, which is expected to increase by around 25%. Now, if you look at the composition of it is tilting toward the capex. That is, capex versus the total expenditure is expected at around 19% versus 16% in FY22. Now, another thing that we have noticed is the subsidies are getting normalized as food and fertilizer subsidy is down versus, and also Manrega, which is down by around 26% in FY23 budgeted estimate. Now, a couple of data points which we understand could surprise on the upside going ahead. One is the net tax revenue increase is expected in the budget is around 10%, which we understand is conservative given the buoyancy in the tax collection. Another thing, as a whole, GDP growth in FY23 is expected at around 8.5%, which if you look at other rating agencies or maybe IMF or the World Bank, their growth rate projection is around 9%. So again, we understand the numbers are conservative. Now, fiscal deficit target is kept at around 6.9% for FY22, which will go down to around 6.4% in FY23. Now, overall, the government has given a roadmap to take this fiscal deficit target to around 4.5% by FY26. Now, disinvestment target is more realistic, which we understand it is at around 66,000 odd crore. And further, the government is pitching LIC IPO will getting concluded at least in this year or maybe early next year. Now, FY23 borrowing has been bit on the higher side, and that has made yield to inch up by around 15 to 20 basis point. But if you look at actual number could be lower as revenue estimate increases conservative at around 5%. Now, on the income tax slide, income tax slab, there has been no major any change. I mean, in the budget, there is no change which is given by the government. Now, all in all, if you look at the budget has been positive. Coming on the cryptocurrency, now the government has proposed to issue a digital rupee with the help of RBI. Plus, they plan to have a 30% tax on the virtual asset, which in a way means legitimizing trading of private cryptocurrencies and non-fungible tokens. So all in all, we are saying, budget is positive from sector point of view. Capital outlay which the government has envisaged is good for the capital expenditure. Couple of industries which are dependent upon it, be it construction, defense, railway, it is positive for them. Yeah, thank you so much.